Meantime, we want to bring it back home, more domestic related matters, because we talk a lot about the economy lately. Folks are really in tune to a lot of the numbers that have been coming out. And of course, there are the traditional economic indicators. They are revealing that there's an economy that is starting to slow down here. But there are other signs, and they're kind of, I guess, non-traditional and or, kind of unexpected ways that slowing economy is showing up in folks' habits. So here to talk about that some more, we have Ivan Rodriguez joining us once again on Live Impact. It's good to see you again, Ivan. Thank you for joining us. What are you watching right now?
Well, Vanessa, some indicators say the U.S. economy is slowing. Recent data shows it's still growing. Consumer spending remains strong, and the unemployment rate isn't setting off alarm bells. But changes in how people and businesses spend and invest their money could be previews for what's to come. By traditional measures, the U.S. economy, even with its sticky inflation and softening labor market, is stable.
They're not great. They could definitely be better. They could definitely be worse.
Despite the sustained pressure of high prices shaking consumer confidence, Americans are also still spending. But there is a widening spending gap between high and low-income consumers, and signs revealing how people are spending their money may be changing.
We've delayed car purchases some. Appliances, electronics, we've slowed down on that. Travel, we've slowed down on that.
Virginia Tech economics professor Jadrian Wooten points to less obvious indicators of economic discomfort, like cardboard box manufacturing, which is down 9% in 2025 amid U.S. factory closures and cutbacks.
If cardboard box manufacturers were not making as many boxes, that meant that stores were not ordering as many boxes because they didn't anticipate selling as many products in the future.
This week, the price of gold surged past $4,000 per ounce, another possible red flag for the state of affairs.
People are trying to invest money in something that they feel is going to be really stable. And a lot of people do run to gold whenever the markets are a little bit uncertain.
Wooten says even though many are worried about what lies ahead, the health of the U.S. economy relies on its consumers.
If a lot of people think a recession is coming, they're going to pull back on spending. And one of the problems with that is when they pull back on spending, that's actually what ends up causing the recession to happen.
Another non-scientific indicator experts point to is movie ticket sales. Since the Great Depression, people have sought escape through the movies as an affordable way to get entertainment. Sometimes when box office sales go up, it's a sign the economy is headed down. But some experts say it could also be a sign that Hollywood is putting out movies people really want to see. Vanessa?
Really interesting stuff. I mean, we talked about travel, and you kind of mentioned that in your piece and what we're seeing with travel lately. We know after the pandemic, there was a lot of what was called revenge spending, including on travel and experiences and fun things, as folks were able to actually get out of their homes and do more. What are we seeing specifically on the travel front and how folks are spending their money when it comes to that?
Well, people are beginning to change on the type of travel. Since April, spending at campsites has spiked and was up 15% year over year in August, according to Bank of America card data. B of A analysts actually wrote last week that consumers may be trading airfare for fire pits because of affordability.
Wow. Very interesting. Ivan Rodriguez, thank you so much for your time. And of course, I know we'll be watching this topic closely going in the coming weeks. So thanks for spending some time giving us some insights.